Well, good morning. Happy Monday. It's April 17th. Wanted to share with you the latest updates here in the Austin market. Wanted to start with this chart right here. This comes from a local broker. His name's Eric Bramlett. He puts out a monthly newsletter, usually has some great data. I love this chart right here. I'll explain these three lines. So basically, the black line right here is sold prices looking over the last probably 10 or 11 months. This was the peak last summer. And of course, you can see that the price really dropped more aggressively last fall. And then we've kind of leveled off this year. We had another drop in February. Interest rates were really still spiking at the beginning of the year. We touched 7% in February, but you can see the seasonality of price is starting to come back into the market. The March data shows we had another bump up. That's the first bump up in price we've had since April of last year. So almost a year. But now we finally are seeing some of that seasonal price come back up in the market. That's normal. We normally see prices rise in the spring, flatten in the summer, and soften in the fall. That's pretty traditional. But it's interesting to see that here with the black line more concretely. The mortgage rate is this blue line, and you can see we were down last year between 4 and 5%. It dropped a little bit late in the summer, but then it really just went on a tear through October and early November last year. But since then, it's mostly stabilized in the mid sixes. You can see 6 and 7% over here. And I'll show that to you again on another chart. But that's good. What's happened is it's creating more predictability with buyers and sellers, with flippers and builders as well. And that kind of stability combined with the seasonal upswing we normally see in the spring is helping create what we call kind of more of a stable market. I wouldn't say it's a seller's market or a buyer's market, but we're having a really nice typical spring that we would have seen pre-pandemic. And then finally, inventory is this last line. Obviously, last year we've come way up in inventory, but now we're kind of returning to seasonal patterns. And I'll show that to you on this next chart. So this comes from the Texas Texas Association of Realtors. So this is market data. Let me see if I can zoom in a little bit. So these are a couple charts. The first one is showing you the growth trend. Well, we already know the trend. The trend is coming down. So compared to last year, the percentage rate at which we are growing or slowing on price obviously has come way down. And this is where you see the interest rates really kicking in right there. So that is not price. Well, some of it's price, but it's really the percentage growth or shrinkage that we're having in growth. And so anyways, that's come way down. You know, we're down 30% in sales growth since last year. And in terms of median price growth, 12-month moving average, we're back down to flat. But here's where you can see seasonality. So right now, March 2023, down here in the bottom right, we have about, in the city limits of Austin, about 2,200 listings. And we closed about 800. If I come all the way, you can see how low we got in terms of active listings during the low end of the pandemic. And then here comes the interest rate spike, boom. Well, if I go to the same numbers, 2,200 listings, city of limits of Austin, March 2023, and I come way back over here. Here's 2018. Here's 2017. March 2017, we had about 2,061 listings. So if you see the seasonality pattern, here's the growth of listings going up. You get to summer, it slows down to winter, and then you go up in the summer and down in the winter and up in the summer. You get the idea. So when we come over here to March, we're about where we were in 2017 in terms of the amount of activity that we're going to have. You can see most likely we're going to swell up in the summer, and then sales will slow down, as well as sellers will slow down. And so they kind of mirror each other, buyers and sellers. And every year you get this camel hump seasonal pattern, and the price tends to end the year a little higher than where it started, and that's appreciation. So that's what we're really kind of watching this year, is to see, are we going to go flat? Will there be a little appreciation at the end of the year? Will we be down still? There's a lot of talk of recession, so there's still too much of 2023 to happen to give you that answer. But if I look at where we are in terms of numbers, we're kind of trending back to about where we were in 2017. Here is a look at the MLS as of this exact moment. So if I look at March of 2023, we had about 10,000 listings total in the market. Right now, we're sitting at about the same number, 1035. This number is a little low right here. This is the number of sales for April. It's still too early. Most of those have not been reported, but we finished March with about 3,000 sales and about 10,000 listings. So So about 3 out of every 10 homes in 1 month are going to close. So that tells you we're sitting about 3.5, 4 months of inventory, just looking at the ABOR market. And finally, this is the mortgage rate. So we talked about this a little earlier, but we peaked out in February somewhere around 7%. Since then, there's been enough news in the market. We had the bank collapse in March, and we've had, kind of some other economic data showing that inflation is slowly trending down, and that's what we want to see. That's helped the bond market kind of push more people into bonds, thinking maybe we peaked on inflation. And what's happened is it's allowed the mortgage rates to trend kind of in this mid-6 pattern. That's what we want to see. And so right now, as long as we trend in that mid-6 pattern, that's more predictable. It's allowing buyers and sellers to feel like they have more predictability in the market. We also have what I would call our normal seasonal patterns returning, which is where you have a growth in buyers, a growth in sellers. We'll probably see that peak out in June. I would expect by July 4th, which used to be the old saying, sell before July 4th because the second half of the summer slows down. My gut tells me that's going to be back to that normal pattern. And then we'll see a healthy sales market through the fall. And then it usually drops off after Thanksgiving for about a month and a half. Everybody goes on vacation and we start that cycle all over again. Right now, all the data we've seen in 2023 is telling me we are back to that seasonal pattern. I'll show you one last chart here. Let's see, where did I put ABOR? I'll go back to the home screen. I'm going to zoom this up for you. So this is looking at the last 7 days, this box right here called Market Watch. For the last few weeks, we've finally seen the number of new listings get ahead of price decreases. Price decreases were actually trending past new listings every week. I don't think, though, it's because price decreases are going down. We're still seeing about 1,000 properties every week have to lower their price. And remember, we're sitting around 8,000 to 10,000 listings total in the market. So about 1 out of every 10 listings every week is still doing price reductions. So the market is still trying to figure out price with the buyers. We are seeing that little spring upswing. That's a good sign. That shows there's more buyer demand, but it still also means Austin's just kind of bouncing up against that affordability ceiling because of interest rates. And so we're watching that. But it does mean that we're seeing more sellers coming into the market. We're in April now. April, May, June is usually, again, when we peak out on listings. This, again, tells me we're returning to kind of seasonal patterns. Under contract in the last week, if you add these two numbers together, that's the total number of properties under contract. We're sitting just under 1,000. So again, if we have 10,000 active homes for sale, 1,000 under contract, about a 1 to 10 ratio. Last week, we closed about 620 homes. Again, I think that's going to put us somewhere around 2,500 sales for April. And so that again shows us 2,500 to 10,000 listings. We're about 4 months of inventory. So it's not a seller's market anymore. I would not say it's a super strong buyer's market either. It's kind of neutral. It really depends. Some homes are going to sell fairly quickly in 1 to 2 weeks. Other homes are going to play that price discovery game with the market. They probably have more competition, and it could take them 1 to 3 months to sell because of what's happening in the market. And if something's wildly off price or in really poor condition to the price, it may never sell. And so we're still going to see that in the market. But I would say everything's showing me we are back to seasonality. This is going to be a strong next 2 or 3 months, assuming interest rates or something in the economy doesn't stop that from happening. But if we can stay level, I expect April, May, June, it's going to look like a pretty nice normal spring market that we had before the pandemic, like a 2017. And then I expect the seasonality just to kind of take its breath and slow down the second half of the year. Obviously, we'll be watching all the news and keep you up to date. Plan on seeing these videos every single month. We also are uploading all these to our YouTube channel, Ryan Kelly Group. Make sure to check those out. Until then, enjoy the beautiful spring weather and talk to you next week.